Welcome back to the Deep Dive. You are listening to Talk Tickers, the show for professional investors who want the earning signal without all the noise. Today is Monday, January 26, 2026.
And today we are cracking open Bank of Hawaii, ticker symbol BOH.
The results dropped right before the bell this morning, and then they had the call midday at 1:000 p.m. Eastern. And honestly, the market absolutely devoured this print.
It really did. Shares closed at $75.11. That's up $4.31.
A 6.09% gain on the day. Just a huge move.
And the volume tells the real story here. About 1.111 million shares traded. I mean, that is so far above the daily average. This wasn't just noise. The institutions were definitely paying attention.
For good reason. You know, we cover a lot of these regional banks, and usually the good news is just that they're still standing. It's a survival story.
Right, that they didn't collapse.
Exactly. But this one, this felt different. This felt like a masterclass in what I'm calling mechanical margin expansion.
I like that. Mechanical. It sort of implies it's inevitable.
It just happens. We are looking at a massive beat, a big resumption of buybacks, and this balance sheet remix that is practically printing money.
It really was a decisive quarter. If you look at the XLF, the broader financials, or the KRE, the regional bank index, they're kind of choppy, maybe flat.
They didn't move like this.
No, this was a BOH story, through and through.
So let's get into the machinery. We have the press release, the transcript. Let's start with the headline numbers, because they really set the stage. GAAP earnings per share came in at $1.39.
Which absolutely crushed the consensus. The street was looking for $1.26, so that is a 13-cent beat.
A big beat.
But the number that really jumps out at me is the year over year. That's a 63% increase in earnings.
63% for a bank. That's wild. Revenue came in at $189.65 million, which beat by nearly $5 million. But it's not just that they beat, it's how they beat, right?
Exactly. You see a beat this big, and you immediately start looking for the footnotes. Did they sell a building? Was there a one-time tax credit? You look for the non-recurring items.
The accounting tricks.
But management flags strong results, and when you dig in, it holds up. It wasn't financial engineering.
No, it was just core execution.
Right. Core margin expansion and just surprisingly disciplined funding costs. The stock popped about 2.5% in the morning, held that line, and then just surged into the close.
Which tells you that as people actually read the report and listened to the call, they liked it even more.
They did.
So let's be those analysts. Let's dig in. The star of the show has to be net interest margin. NIM.
Always.
For anyone who isn't deep in bank stocks every day, can you give us the quick and dirty on why NIM is so important?
Sure. NIM is basically the bank's gross profit margin. It's the difference between what the bank earns on its loans and investments and what it has to pay you for your deposits.
The spread.
The spread.
Yeah.
You want it as wide as possible.
So how did Bank of Hawaii do?
NIM came in at 2.61%. That's up 15 basis points quarter over quarter.
And just to be clear, 15 basis points, 0.15%, that doesn't sound like a lot. But in the banking world, that's a massive move for one quarter.
It's huge. And here's the kicker. This is the 7th straight quarter of NIM expansion.
7th.
In an environment where most banks are getting squeezed, BOH has grown that margin for almost 2 years straight.
So that gets us to the why. CEO Peter Ho kept talking about this idea of remixing the balance sheet. What does that actually mean?
It's simpler than it sounds, but it's incredibly powerful. You have to remember, banks have loans and bonds on their books from years ago, from when interest rates were basically zero.
Right, the cheap money era.
Exactly. Those assets pay very little interest, but they mature, they come due. In Q4 alone, BOH remixed $659 million of this stuff.
$659 million in one quarter.
Just in Q4. And here's the math that matters. The assets that were rolling off the books, they had a yield of about 4.0%.
Right.
The new loans and securities they put that cash into, they're rolling on at a yield of 5.8%.
Right. Wow. So you're instantly trading a 4% return for a 5.8% return on hundreds of millions of dollars.
Precisely. It's a 180 basis point pickup. That creates this mechanical tailwind. Even if the Fed does absolutely nothing for the next year, that margin just grinds higher as old assets mature.
It's like gravity. It just happens. And they're not hiding it. Management explicitly targeted a NIM approaching 2.90% by the end of 2026.
Which is bold. But if you look at where their NIM was just for the month of December, the spot rate, it was already at 2.67%.
So the trajectory is already there.
It's already in motion.
Okay, that explains the mechanical part. But the other side of the equation is your cost. The deposits. And this is where the call got really
This
interesting.
was a big surprise of the call for me.
In a world where every bank is fighting for deposits, throwing 5% APY offers at everyone, Bank of Hawaii recorded that their non-interest-bearing demand deposits grew 6.6% in the quarter.
Let's just pause on that. Non-interest bearing, that's banker speak for free money.
Free money, checking accounts that pay zero interest.
The best kind of funding. And it grew by 6.6%. That is nearly unheard of right now. Usually that number is shrinking as people move their cash to high-yield savings.
How are they doing it?
Well, the CFO, Brad Bradenberg, was pretty transparent. He said that 6.6% might be outsized, maybe a little seasonal.
So don't model that forever.
Right. But even if it just stays flat, that's a huge win. And it gets better. Their interest-bearing deposit costs actually went down by 20 basis points.
They paid less.
Their total cost of funds improved by 16 basis points. They talked about deposit beta improving from 28% to 31%, with a hope of getting to 35%.
And deposit beta is just how much of the Fed's hikes you have to pass on to your customers.
Exactly. You want that number low. You want to be stingy. And they highlighted this thing called mix shift, which is money moving from free checking to expensive savings.
That hurt them a lot back in 2023.
It did. In Q2 of 23, they had almost $1 billion, $967 million of adverse mix shift. It crushed them, but this quarter.
What happened this quarter?
A positive $100 million shift. Money is actually starting to move back into the better, cheaper accounts. It's a massive reversal of the trend.
Okay, so summarizing the engine here, they're earning way more on assets because of the remix, and they're paying less on deposits.
That's the winning formula. It's why that NIM expansion feels so durable.
Now, you can't talk about a bank without talking about risk. And right now, all you hear about is commercial real estate. Office towers are empty, doom and gloom everywhere.
It's the big dark cloud over the whole sector.
But on the call, Bank of Hawaii's management used a very specific word to describe their credit quality. Pristine.
That's a strong word for a CEO to use. You say that, you better have the numbers.
Did they?
Oh, yeah. Net charge-offs were only 12 basis points. That's just $4.1 million. And their non-performing assets, the loans that are starting to look shaky, actually declined to 10 basis points.
I think they mentioned one specific charge-off, right? $1 million.
Yes, an idiosyncratic $1 million charge-off, which is just a fancy way of saying this was a weird one-off situation, not a trend.
But I have to push back a little. They have to have office exposure, right? Honolulu's a major city. Why aren't they getting hit like banks in San Francisco?
And this is where you have to understand the unique dynamics of Oahu. On the mainland, you have a supply glut. Too many buildings, not enough tenants.
Right. Vacancy rates are through the roof.
In Oahu, the total supply of office space has actually declined by 10% over the last decade.
Wait, decline?
Declined. They've been converting older office buildings into residential condos and hotels. So while the rest of the country is drowning in empty office space, Oahu has low vacancy rates because the supply has been shrinking for 10 years. There's no glut.
It's pure island scarcity.
It is. And their loan-to-values are super conservative. Their commercial real estate weighted average LTV is 54%.
So on a $100 million building, they only lent $54 million.
Exactly. The property price could drop 40% and they'd still get all their money back. It's a massive cushion.
And it seems the economists agree. The bank actually lowered its allowance for credit losses by $2 million.
Which is basically them saying, the rainy day we were saving for isn't coming. They explicitly said the economic forecast for Hawaii has improved.
Okay, so margins are expanding, deposits are stable, credit is pristine. What are they doing with all this extra cash?
Giving it back to shareholders. Buybacks are back on the menu.
I saw that. They bought back about $5 million in Q4. It seems a little small, no?
It was a warm-up. On the call, they signaled a clear intent to scale this up to $15 to $20 million per quarter.
Whoa! From $5 to $20 million a quarter. That is a serious ramp.
A 4x increase. They have $121 million left on their authorization. At that pace, they're going to be a consistent, relentless buyer of their own stock for the next year and a half.
That creates a floor under the stock price. The company itself is there to buy on any dips.
Exactly. And you still get that $1.70 quarterly dividend.
And expenses.
Very disciplined. They're guiding for a 3.0 to 3.5% increase in 2026.
Yeah.
Very reasonable.
And loan growth is low to mid single digits, so they're not chasing growth.
No, and that's a good thing. The focus is profitability, not just getting bitter. It's about sweating the assets they already have.
Okay, so we've got a bank that is just executing perfectly. But we're talk tickers. We try to figure out how to trade it.
The actionable insight.
Which brings us to our favorite segment. This is not financial advice.
Let's be very clear. This is absolutely not financial advice. We're just two voices in your headphones. Do your own research.
Okay, we're at the hedge fund. We have to pitch an idea. Expert, what's the pitch?
The pitch is what I'm calling the Aloha Fortress carry trade.
I love that. The Aloha Fortress. Break it down. What's the trade?
You go long BOH Bank of Hawaii and you go short XLF, or even better, a basket of mainland regional banks that you know have high office exposure.
A pair trade. You're betting BOH outperforms. What's the rationale?
You're arbitraging island scarcity against mainland glut. The market still prices BOH like it's just another regional bank. It's in the same ETFs as banks in Ohio dealing with 25% office vacancy.
But as we just said, BOH is dealing with negative supply growth.
Exactly. You're betting on that divergence. While those mainland banks are setting aside massive reserves for defaults, BOH is releasing reserves.
And while you wait for the market to figure this out, you get the carry.
That's the best part. You have this mechanical asset repricing, that 4% to 5.8% jump. It guarantees margin expansion. It's almost a win-win. If rates stay high, BOH wins on the remix. If rates get cut, their deposit costs fall faster than their asset yields.
You're basically buying a money printing machine disguised as a boring bank.
A money printing machine that's about to start buying back its own shares to the tune of $20 million a quarter. That creates a persistent bid for the stock that the rest of the sector just doesn't have.
That's the catalyst, the buyback floor with the margin expansion upside.
And the market is just starting to wake up. That 6% move today, I think that was just the appetizer. That gap between BOH and the generic regionals should widen all through 2026.
I love it, the Aloha Fortress. It sounds like a vacation, but it trades like a beast.
It really does.
So let's wrap this for our listener. Bank of Hawaii, a beat and raise quarter.
Check.
Margins are expanding mechanically.
Yeah.
Credit is, to quote them, pristine.
Yeah.
Thanks to the unique Oahu market.
Check.
And the buyback machine is just getting started.
The market's reaction today confirmed it. The margin momentum story is real and it has legs.
This is a fun one. It's rare to see such a clean story in banking right now. Usually there's at least one thing you have to hold your nose on.
There is. No caveats, no major adjustments, just solid banking.
Thanks for tuning in to this deep dive on Talk Tickers. If you're holding BOH, it was a very good day. If you're not, well, at least now you know why everyone else is celebrating.
See you on the next print.